Hi everyone. Today we're going to analyze the stock of Logitech. The ticker is LOGI. Trades on the Nasdaq. So Logitech is a Swiss American kind of hardware electronics manufacturer. They manufacture a lot of things that I would think of as like PC accessories. So like keyboards, mice, headsets, webcam, things like that. And if you go to their website, kind of see all their products. They manufacture, quite a gambit of different PC products like speakers. They have a specific gaming line called Logitech G, where they manufacture like gaming keyboards, mice, and things that a lot of people who play games use, such as myself. And they own this very kind of famous microphone company called Blue Microphone. So yeah, I've broken out their kind of segments. They have 8 segments. This is mostly by their revenue. So like gaming is their biggest. They have the most sales in gaming, followed by keyboard and combos and video collaboration, pointing devices and stuff like that. So yeah, Logitech is moving on to like their how much the company's worth. So it's a $12.7 billion company, has no debt on the balance sheet, 800 million of cash, trades at $80 right now. It's up quite a bit since March, right? But it's the same with all the stocks that are in the market. Everything's up a lot. So it says it has a PE about 28 times. So after doing some research, I came up with a few reasons why I think this company, like kind of the upside scenario, why this company, why the stock can go up. So number one is so after their Q2 earnings release, the company said that the full year revenue should be up like 10 to 13%. And I think that's actually a huge underestimate, because if you look at their revenue growth just in Q1 and Q2, that's already an average. That's already like a 20% revenue growth just in Q1 and Q2. And they're saying their full year revenue is only be up like 10% or 12%. So I think one reason is because this is based on information they had to work with back in when they reported earnings in June. Maybe like they thought, people are going back to work and the pandemic is like a temporary event. So they didn't have as much information as we do now, right? That people are continue to, working from home, and continue to the pandemic is still going on. So I think based on what they knew back then, they had to kind of almost like sandbag it and say their revenue is it's only up 10, 13%, even though I think their full year revenue is going to be up way in excess of that, just knowing like the trends, right? Also, yeah, I think there's there's going to be accelerating demand for their products, just due to the trend of working at home. A lot of people now, a lot of young kids, and they're like streaming, they're gaming. Streaming's become like a huge. It's kind of exploded in popularity right recently, and if you're selling equipment that helps people stream, like you're in a very good place. So I think they're not. I think the market itself isn't really fully appreciating what the demand is for their products right now. Due to I think one is like the pandemic is actually longer lasting than the ramifications are longer lasting than people think. And second, I think in the past there's kind of been this like I saw this with video cards. So back then everyone was all about processor, like CPU speed, and then I saw this gradual shift where people started paying a lot more attention to their to their graphics cards, and nowadays graphics cards are becoming more, even they're even more, the premium graphics cards are even more expensive than the processors in your computer, and that's driven kind of by gaming and kind of the increasing popularity of gaming. And I noticed that people are actually willing to pay a lot of money for accessories too now, like I like things like gaming mouse, like even like keyboards, webcams, microphones, or even like the gaming pad, right? These things used to, I think I wouldn't used to pay like more than $20 for a mouse, but nowadays people are paying like hundreds, over $100 for just a nice gaming mouse, and keyboard and all that stuff. So there's kind of been like a shift where I think people are willing to pay like premium prices for these accessories, similar to what I saw with graphics cards, where people didn't used to want to pay that much for that, but now it's like the biggest, most expensive component in your PC. So kind of related to that is I think Logitech specifically, they have a good brand. They almost have, like, this is my opinion, they almost have like almost an Apple status for gaming mouse, webcam, and their Blue brand of microphones. So if you go to Amazon and then you just look at like the top sellers, and then don't look at the ones that are like $20-$30, the really cheap ones. You notice that Logitech occupies a lot of the spots in the top sellers in kind of the premium segment, right? Like the mice that are like $100, the webcams that are like $100. Ignore like I'm ignoring like the no brand, like $30 ones. But so that's kind of interesting. I even noticed that when I was trying to look for a mic and a webcam, noticed that the Logitech products were actually like out of stock. The band was so great that they were actually, I think, out of stock on Amazon. And I'm not sure how often that happens, but I thought it's quite interesting, and I think it's indicative of just the accelerating demand for their stuff, that people want to buy them. Now let's look at their financials a little bit. So they have a very strong balance sheet, which is something I always like when I see a company with no debt and a lot of cash. Logitech is one of those companies. No leverage, right? Very strong balance sheet, very good return on invested capital, in the 20s. Definitely a pretty healthy return on invested capital. And then let's go on to valuation. Now this part I think is a little contentious, because I've read some research where they say that like Logitech is up so much, you can see their stocks up. They were trading at like $40-$50 last year. Now they're $80. So their stock is up quite a bit, and people think, they're trading at like around a 30 time free cash flow multiple, and that's quite high. But I think you have to, if you look at it relative to the market. Remember, if you look at the Schiller PE, the average company in the S&P right now has a PE of 32 times. So Logitech is around there. It's basically no more expensive than the average company in the S&P 500. And is the average company growing at like 20 time revenue? Is the average company growing their free cash flow on a trailing 12-month basis at 82 times? I don't think so. So relative to the market, I don't think even at a 30 multiple, it's not that expensive. That's not even accounting for the fact that I think the multiple will come down drastically in Q3 and Q4, because this multiple is Q3, Q4 2019 before the pandemic plus 2 quarters this year. I think next 2 quarters, historically, if you look at 2019 and 2018, Q1 and Q2 are relatively weak in terms of their free cash flow generation, which means they generate most of their cash flow in Q3 and Q4 in the Q3 plus Q4. So I think even if you assume, so you can see that like this first half of this year, they already blew first half of last year out the water in terms of free cash flow generation, right? They generated $170 million of free cash flow versus like 25 million last year, right? In the same period. But even if you kind of assume that in the second half of the year, they, generate, I'm going to assume they generate like 30% more. I mean, that puts their free cash flow for the full year at 500. And I think 30% increase is like really conservative, considering versus like last year, the first 2 quarters last year, they generated only 25 million. First 2 quarters, 170. So it's not even like a good comparison. I think they can easily generate, 50. They're up like 50% on a trailing basis. They're up 80%. On a trailing 12-month basis in free cash flow generation, and 50% in Q1. I mean, if they generate just like 50% more cash than they did last year, that puts them at, 530. So at a 530 free cash flow for the full year, you're looking at just like a 24-time multiple, which is not expensive relative to the market. It's actually I think it's really difficult to find really good companies that are growing very fast, trading at just around 20-time multiple in this market. And I realize this is like unique to this market, because in normal market, 20 times is actually like not that cheap. So going back to that, I think valuation is it's kind of subjective, right? I think it's given that I think multiples will come down, especially in Q3 and Q4. I think it's actually quite reasonable, but you can make the case that it's expensive. Like if you're a value investor, and traditionally it is, if you're looking for like a 10-time multiple, you're not going to find any good companies trading at 10 times in this market. So let's think about like some of the risks, right? So when you look at, when I think of reasons, the upside, I always think of like the downside where I could be wrong. And one of the downside is kind of a flip side of the accelerated demand due to COVID. It could be like a temporary phenomenon, where you get this huge pickup in sales that's maybe just lasting a few quarters, and then the demand falls back down to earth, or falls back down, and you're not gonna, and it's just like a one time good guy. So so if demand is reduced kind of after the lockdown ends sooner than you expect, the working from home ends, all that stuff ends, then that could be like a risk to my thesis, right? But I think it's somewhat mitigated by what I said about how people are now, once they've decked out their PCs, they're kind of going the next step, and they're now decking out their mice and their keyboard, their headphones, things like that. So I think given that Logitech is like the premium brand in those segments, I think that I think they're more the pricing is going to be more sticky, and I think people are going to be willing to pay for a more premium price for those products. And even now, I can see this is clearly a product, even though it's just a gaming mouse, but their gross margins are like 40%. Like and operating margins are, you know, in their teens, but just by the fact that they're able to sell their products with a gross margin of 39%, that means they have some pricing power, right? It only cost them, 60 cents to make something they sell for $1. So they have some pricing power there. Secondly, they do have competitors, right? And a competitor, their products, arguably they can catch up to Logitech products and displace them as like the market leader, take their market share away. And there is one other publicly traded kind of gaming accessory company out there called Razer, much smaller company, like 1/8 the size of Logitech, and it trades at, I did a very crude analysis, it trades at around 20, 23, 24 times. Recently, it's done really well recently, just like Logitech, but in the past, it's actually kind of like had losses and stuff. So it's also much less diversified than Logitech, but potentially you can make the case that there are competitors out there that, and making keyboards and mice is not as complicated as like making like an iPhone or like a computer chip, right? So, or a CPU. So it's technically a lower barrier and people can get into it. And thirdly, like, you always have to pay attention to the macro. This is all just like stock specific analysis, but if there's like trade wars, there's tariffs, if there's a huge slowdown in the economy, there's a macro factors that will bring everything down. That will bring all stocks down, and it's not going to be good for Logitech either, being that it's a stock. So yeah, I mean, so this is kind of my quick analysis on the company. They have earnings in a few weeks, in reporting like early November, I believe. So I'm very interested to see if my thesis kind of stands, that I think people aren't really fully appreciating like how fast the revenue is growing because of the recent events. And I think I mean, we'll see in a few weeks with the earnings release, and maybe I'll do an update video after their earning comes out. All right, cool. Thank you. Let me know what your thoughts are on the stock. Like if you know this company really well or their products really well. If I missed anything that's of note, let me know. Thank you.